Okay. So good afternoon, everyone. Everyone from anywhere part of the world. This is Pius Joseph, Pius FX, CEO, Pius FX Forex Institute, and that's my group on Facebook, Pius FX Forex Institute. So I'm doing a short video on the intraday strategy. Yes, actually a consistent one. An intraday strategy, a consistent one. So I'll be using the USD card, as you can see here. I'll be using the USD card. So this is the daily. I'm starting from the daily. It's actually an intraday, but first, the most important aspect of this strategy is you have to understand. You have to get have a firm grasp on support and resistance. People do save support and resistance, but I mean, many people don't use it, and you have to know some the strategy is based on support and resistance, time of day, the support directional premise. I'm using the daily chart to get a directional premise. A directional premise is like a forecast where you feel price is heading to, where you feel price is going to, where you think what your analysis shows that price might be going to, where price might be heading to. All right, so that's that on that. And it's actually a simple strategy, no complications, and straightforward. So the daily chart first, I'll be taking my levels from here and mapping out a particular swing whereby I'll be using for the example. So let's map out where we would actually be using. So it's going to be colored so to know what we're actually looking for. Okay, before that, let's just assume right here. Let me add the shapes. So so right here, this swing here, let me add another one. I'll go up, and this swing here, yeah. So this is a swing leg, and you can see obviously this line, the 1.3133 level, has been holding price. You can see it here, you can see it here, you can see it here, you can see something happening here, and you can see it here. But reasonably, you'll be expecting price to get here maybe, because this is the highest swing here. This is the highest swing here. So I'm picking out my levels first. This is the most important thing. You see, this is price action. It's not okay. Let's go on. So let me map that out from here to here. This is the swing we're going to be using. I'm going to be using this swing. No, be using this swing. We are going to come back to this other swing, but I'm using something that is obvious, so you don't fall off track. You know what you're looking for. Let's place that back. Exactly. So let's go down to a lower time frame. And this is pure hindsight. It's to use, you can't use anything less than history repeats itself, I quote. So you have to use what has happened in the past to know what will happen in the future, because price action is generic. It's going to keep happening. Nothing is going to stop it, because I mean, no one is stopping it from happening. So this what color is this zone, this place I mapped out, is just to show where is just to show. So this is a cell model. This is what I call a cell model, or a cell program rather. A cell program. This is a cell program. A cell program from this high to this low. This is a cell program. I'm using this to give you what you actually can be looking for. So in a cell program, you're only looking for cells. That is just what the cell program is. In a cell program, you're looking for a cell signal. Each day you enter the market, you know what you're looking for. You're looking for a cell signal, not a buy signal, a cell signal. That's what a program is for. You have to have, there are 4 rules about trading. You have to have a forecast first. You have to know where price might be heading for, where price is heading to, what your analysis shows. And you have to have a trigger condition, and that's what I'm going to be teaching here. That's just one of the trigger conditions. The trigger condition is like your entry. What's going to make the trade a valid trade? What's going to make the trade a good one? What is going to make the trade a high probability setup? What are you looking for? And the third part of it, so after a forecast, then you move to a trigger condition. That is the type of analysis you use: trend lines, harmonics, RSI, CCI, MACD, stochastics. Just a moving average. Anything you use, you have to have a forecast first. Looking for. Then we move to invalidation and risk. Because okay, this is it. If you risk, the only people that understand risk are people that know what they are doing. If you don't know what you are doing, you don't know what risk is, because you can't be assuming risks when you don't know what you are doing. So you have to know what you are doing. What invalidation and risk is, the meaning is what would make, like, because this market will deal in terms of probabilities, what do you want to see to make the trade invalid? That's why you use a stop loss, of course. What do you want to see to make the trade invalid? What is going to make the trade not good? What is going to make the trade not a good trade? That's what we're heading to. What's going to make the trade not a good trade? What is going to invalidate that signal? If you see, like in sell program, you see a sell signal, what's going to make that sell signal not a good sell signal? Then the fourth part of it is target and reward. You have to have a target. Before entering a trade, you have to know where to take profit, because if you don't do that, you are going to get emotional and it's going to cloud your judgment. So you know there are some trades that I would actually go into profit, then you leave it on, then it becomes rubbish. It has happened to me many times because you have to know where to take profit. You have to know where you're taking profit, and you have to learn how to take partial profit. You know, split gain ratio, opening like multiple positions to take profit partially, because you have to put something in your pocket so you don't get emotionally driven. So that's just it. You have to understand risk and reward. Risk and reward. So right here, this right here is a sell program. From this high to this low, down to this low is a sell program. So like 2 weeks maybe it was a continuous sell. To continuous sell. Let's move down to a lower time frame, 1 hour. See, exactly. So lower time frame, 1 hour. I don't know if this thing is visible to some people. So, okay, let me just this the horizontal line. So like it's more visible because the zone is making it not visible. Let me delete this one. Okay. All right. So right from this eye, don't forget. Right from this high to this sorry, this high, let me add that this high to this low, and this high to this low, this low here. I think it's like 2 weeks. We are looking for sales. That's what you should be focused more on. Sales. Let me give you this. In a downtrend, like in a downtrend, this is a visible downtrend. Obviously, you can see that this is a downtrend. You shouldn't really try to buy a low. What I mean by that is trying to, like, now this is a low, this is a low, this is a low, and this is a low. This is a low. So in a downtrend, you shouldn't try to buy a low. In an uptrend, you shouldn't try to sell a high. These are rules that are going to really help you. Stop fighting with the market. Just let the market do. That's what we call price action. Let it naturally come to you. You already know what you are looking for. This is like we said earlier. This is a sell model. This is a sell program rather. Sorry, sell program. So during that week, you are looking mainly for sales. Beginning with this week, you are looking for sales mainly. Let's get down to the entries. That's what the stochastics is going to be used for, with minor um with micro horizontal lines. Like, this line here, this horizontal, the 1.2767 level, this is a major horizontal line. This is a major horizontal. There are some, or there are some horizontal support that are not controlling the market like majorly. That they do just happen intraday, intra-week, like support and resistance that you can see, like maybe on a weekly, like a weekly support and resistance, daily support and resistance, session support and resistance, like the market can make an high, like a high or a low in maybe his Asian session, um, the London session or the New York session. You can use these sessions too, like they work too, or the daily high or low. You can use that the daily high or low. You can use that for support and resistance. So from here is you are looking mainly for the signals will work for a buy too, but you have to filter out. This is what we call discipline. You have to filter out these signals. Signal for buy will come. So when people say they use stochastic, before you put on a stochastic, before you put on an indicator on your chart, you have to have like an idea. It should come with a trade idea. Like after you have a trade idea, then you put your indicators. You don't just use indicators before you have a trade idea. You have to know what you are looking for, where you expect price to reverse, where you expect price to bounce. Then you use your indicators to judge it, just to add to the probabilities. That is how it is. To add to the probabilities. So don't cloud up your judgment with indicators, because oversold and overbought strategy has actually not helped anyone. It's not that simple. You can't just buy when the market is oversold or sell when the market is overbought. If it's that simple, then everyone would be a millionaire. So it's not that simple. So you have to have a trade idea before you do all this. Trading is about is 90%. Let me okay, don't let me, let's say 70% psychology. It's not really about what skills or your analysis. It's about psychology. You have to be confident. You have to be able to take losses. You have to have a good risk to reward. So stuff like that. Stuff like that. You also have a good risk to reward. You have to know what you're looking for. Uh-huh. So in a downtrend, there's something that I'm going to tell you now. In a downtrend, it's actually the market makers manipulation. So I'm going to move down to the 15 minutes now. 15 minutes, 15 minutes now. Exactly. So this is where the downtrend started. And this lines here, they delineate the Asian session. I use them to know, the Asian session is typically a consolidation type of market, the quiet market. So I use that. I use that for to. I use that to know when I'm actually looking, because where good setups are in London and in New York. So I use after the Asian session. I do trade the Asian session too. They are good setups there, but I would like to see. I mostly use the London or the New York. But the Asian session is actually a good setup. It can bring a good setup for you. So let's add our stochastic oscillator indicator. So if you are setting your stochastic, you are going to be setting the K period 14. The K period is going to be 14. The D period is going to be 3, and the slowing is going to be 3. So it's 1433. 1433. And the moving average method is simple. Moving average method is simple. And the price field is low stroke high. That's low high. Price field is low high. Is moving average method is simple. You can use exponential too. You can use the exponential, or you can use the exponential. Okay, let's use the exponential. You can use simple or exponential. Not really much different. But the most important thing is the periods. 1433. The K% period is 14. The K period is 3. The slowing is 3. I'm not really much of an indicator-based trader. I'm just using this for new trader, or perhaps because people do use the um, the indicator, the stochastic oscillator. So I'm not really an indicator-based trader. So the first day of the week, we're going to be marking. We are going into the market this week. I'm looking for sell signal, sell signal. If you want to take a buy signal, it's all good, but mainly you are looking for sell signals. Sell signals. Let me build that a bit. So, uh, I don't know. Let's see them. Let me see the 30 minutes. Let me see 30 minutes. Because for me, this trader, I'm actually good with it. So my entries, I can use the 1 hour, 30 or 15, 5 minutes, because I know what I'm looking for. So I'm always, the entry is not that, but mostly it's actually the 15 minutes. Mostly the 15 minutes is a good entry. 15 minutes. So let's just use the 15 minutes. Let's use the 15 minutes. So to avoid any mistake. So let's use the 15 minutes. The 15 minutes. Or the 30 minutes. 30 minutes. Let's start with 30 minutes. Okay. Aha. So what we're actually looking for, what we're hunting is the divergence. The divergence. We're hunting a stochastic divergence. The trend following divergence. A trend following. So you are mostly going to be looking at the eyes, the swing eyes, the eyes form. You are going to be looking at the eyes that have been formed. The session eyes, the, the the daily first week. Sorry. Mhm. So on the first week, after the Asian session is 0 GMT to 0 GMT to 5 GMT, 5 6 GMT. So you can shift that to your time frame wherever you are, the GMT. Like that's the United Kingdom time frame. So GMT, the 0 GMT to 5 GMT. But this one is actually set 0 GMT to 8, 8, 8, yes, 8, 0 GMT to 8, 0 GMT to 8, to 8 GMT. Yes, that is the settings, 0 GMT to 8 GMT. And the London session is actually 9, 10, 9, 10, 9 to 10 GMT. You should expect the London session. In the New York session is 12 GMT to 13, 14, 12 to 14 GMT. So like 2 hours. That is the starting. It's not accurate like GMT because this thing do shit. So you really have to blend with it. So 5 0 GMT to 5 GMT, you're going to see the Asian session typically consolidating. You are going to see like consolidation there. So, and let me tell you this thing: like after the Asian session, in every day, in a day, there's always a fake move. Like every day, there's always a fake move. There's always a fake move. In a downtrend, you are actually going to see after the open here, you're going to see a swing high. This day was actually a consolidation, so there was no trade here. There was no trade there. And if you actually wanted to take a trade, uh, no trade, the the indicator wasn't posting any trade here except from this one. You can see from this one. So this eye here, this eye. Let me use come on, let me this eye here, this eye. So this eye here. Since you are looking for a sell signal, this eye here, this eye, so this eye, you can see it's obvious. So I'm using this vertical line so you can actually see the swing it's posed. So you see the divergence here. So this is what I call a run on stops. Like anybody placing a stop here would actually just get stopped out. Your stop has been taken here. Like if you were selling it right here, the market took your stop out, then went down back. You can see that it went down back. So it's actually it's a raid on stops. You can see the price was making an higher high. So divergence, the thing about divergence is just uh, looking for places where the indicator didn't meet price or price didn't meet the indicator, like a break in correlation between the indicator and price. Break in correlation between the indicator and price. Between the indicator and price. That's just divergence. A break in correlation. If the price is making a lower low, the indicator is supposed to be making a lower low. Right here is a sell, is a buy signal. Right here is a buy signal. But what are we looking for? We're looking for sales. We are looking for what? We are looking for sales. So right here, this place is a buy signal. So this is to actually work both sides. If I could tell you to just take the mindset of not a bull, not a buyer or a seller, and just go and take uh take any signal on that your indicator shows. But that will just be like getting trapped. If the downtrend, you can't be fighting against the tide. It's like swimming against the wave. Like not following the oceans, they just take you smoothly. Like sailing against the wind. So driving you get so sense. You have to do what price tells you, what price shows you. You have to wait for price to show you this and do it. So right here, this is a, so let's see time of day. I told you we'll be using time of day too. So this time you should be hunting for sales. This is actually the New York session. You should be hunting for a setup around here. Should be hunting for a setup around here. This is the New York. This is the London session. This is the London session. I can't actually call this a divergence because it's actually because it didn't do what you don't have to think about. You have to do the obvious. You have to make the price shows you what it's doing. Right here, this is a good entry for a sell here. You can sell here too because, but the indicator, I really believe in the indicator, but you can use it. At least this is a good setup for the day. This is actually like many pips. So let's just assume you entered there. Let's be realistic. You entered there and you took profit right here. This 37 pips, or let's say you did 30 that day. So you're taking profit around here. That's good for the day. 30 pips for the day. This is a buy. I told you this is a buy. So for this sell, the indicator or the price was making. You have to look at price. You have to look at price first before the indicator. That's another rule. Look at price first before the indicator. So price was making an high, but indicator wasn't making an high. So what do we do? Sell. See, price was making. See it here. See this swing here. See this swing here. This is the swing. This is the swing. This is the swing. So around here. This is the swing. So price was making an higher high. Price was posting an higher high, but the indicator wasn't. So that's a good sell there. That's a good sell there. That's a good sell there. A good sell. Like I told you about the buy. This is a good buy. Lower low. The indicator wasn't. But we won't take this kind of signals, even though it actually was actually a good one. It was actually a good signal. See, you could have taken 30 pips there too. Realistically, 30 pips. So we could have done 30 pips. This is the pips, the one in the middle, the one changing 31, 30 pip. So you can do 30 pips. Yeah, that one is gone. And intraday. So 30 pips for a day, I think that's good enough. That's good. You don't have to. 1,000 pips won't make you rich. Don't actually give you money. So it gives you money, but 1,000 pips won't. Am I going to put it? Doesn't guarantee success because you have to look for something you can do consistently. What you can do repeatedly every day by day, day by day. So you have to understand that you have to look for something you can that is consistent and you can do. You can't do 1,000 people every week. Any person that says doing 1,000, it's a lie. It's a lie. Because obviously people don't post their losses. You just post win, win, win. And you have to be disciplined. You don't have to be trading every day. Because in an intraday session, it doesn't mean you should be trading every day. Over trading brings, I don't know, loss of money. So the other day, this line is showing another day. So this is a Sunday. This is a Sunday. This the broker forex server. This is actually a demo account that I used to do my analysis. Then I place my trade on my real account, obviously. So this is a Sunday. This is a Sunday. Sunday's trading. Most forex broker don't show this the Sunday's trading, but this broker actually shows that. So it's all good. Here's another day. Any session. Now look at this. Another day. This is the Asian session. Wherever you are, the times that fits you. That's when you look for setups because you are what you are in a sell for setups in times that like suit you. But I think the best time is London session, obviously, or the New York. So this is another day. This is a high. You have to be able to view this swing. You have to be able to see these swings. And people, you have to be able to see these swings. This is a high. This is another high. So obviously, price was making higher high here. But what was the indicator doing? The indicator wasn't. It wasn't making an higher high. See, this is the Asian session. This is a you okay. This is another way. This is another way to wait for a confirmation. Another entry. Entry is you can wait for it to cross. Personally, to me, I don't look at the indicator for it. I look at price. You can wait for a swing, the swing high. Many people don't know what the swing high is called. Okay, let me show you what. Let me just show you quick. I'll do a quick example on what the swing high is and what the swing low is. So this is a swing high. Let me maximize it so you can see it well. So insert coming text. I'm familiar. I just want to do the swing high. What they showed in the Olympic, the 1, 2, 3. So like the 1, 2, 3. I don't know where that is. Sorry, I want to change the color. Okay, close. So this is 1. A swinger is a candle. A candle. People that do read candles, so you can grasp what you are looking for here. A swing high is a candle with a lower candle beside it. One like each, one lower candle beside it. So this is candle. It has a lower candle here. It has a lower candle here. So this is a swing high. The fractal, there's an indicator that is called fractal in the MT4. That one uses, it's aggressive, it uses 2 lower candles. But the swinger is one candle, like one lower candle, one higher candle, one lower candle. So let me use the numbers to show you what the swinger is. Let me place 2 here. 2. Insert shapes. So let me place 3 here. So this is a swinger. 1, 2, 3. So once you see this, when you start seeing this, this is this Asian session. You're actually expecting something. You are in a sell program. You are looking for a sell signal. You come into the market. You see this hype. There's an eye being posted here. So this is actually, it's not really clear. It's actually the same, but it's actually an eye. There's an eye here. So I think this one is this is an Asian session. So the level is clean. Let me just look for the one that nothing really. But this is an eye. So I think if we check, maybe if we check the higher time frame, we'll be able to see something clearer. So you should actually look at the higher time frame too. If you look for at the higher time frame, maybe the 30 minutes, since your entry is going to be in the 15 minutes, you should look at the 30, 1 hour, 4 hour, 3 or 2 time frames. You can skip the 30 and go to the 1 hour, 4 hour. That is higher time frame. The higher time frame begins from 4 hours, daily, the 4 hour, the daily, the weekly, and the monthly. And the lower time frame is obviously the 1 hour, 30 minutes. Lower time frame begins from the 1 hour, and the higher time frame begins from 4 hours. So the 4 hour time frame. So this is the swing eye. You wait for the swing to form. You wait for it to cross. So you are going to be entering, getting in this trade around on this candle. So you are getting on the third, after the close of this third candle. So this is from the swing eye. It's crossed, good entry. You place a sell, and the stop loss. Yes, I'm going to be talking about stop loss. It depends. You can use above this eye. You can use 10 pip 10 pip stop loss. I think that's fair enough. A 10 or 20. A 10 or 20. A 10 or 20. So if you got in around here, really, I don't really like stop loss, but if you can't stay with the trade, I think 10, 20 stop loss is enough, depending on how long you want to hold the trade. Since you are looking for, so you can, so let's just assume you took profit right at this low posted here, this low. So you entered here and took profit here. So that is 30 pips. You took profit here. That is 34 pips. 34. So I mean that's okay. Now that's a good setup. That's what I call a high probability setup. Not really, but since it's a system, this is actually a system. It's actually a good setup. It's a good setup. It's a good setup. So this is another one coming. This is I know you people have been seeing this. I oh sorry. Sorry. Two. So I delete that one. Okay, this I. Look at this one again. So this I. One, two. And the close, we're talking about targets now. I'm talking about risk. You can risk 10 to 20, whatever suits you. And but for a low risk, I think 10 pips is enough. 10 pips, but 10 pips is actually a small stop loss because you can easily get stopped there because of this market maker tricks and just to get people out of the trades early. So you can you can use uh, a 10 a 20 pips stop loss either, because for 20 pips you are risking 20 pips for uh your risk is 20 pips but you are getting 30 pips, so that is a good risk to reward. So let me start the test for the one the one. Okay, so 1 2 3. So you can see obviously I here I here being posted I here. So price was making lower low, and you're looking at price. So when you're looking at the indicator, you have to start stocking for this, because when you like into the market and you made this, maybe price was going down, you're looking for a good entry. So a good entry, you're looking for a good entry. Even okay, I'm not really talking about Fibonacci here now, but I'm just going to add that to it just to show you. I don't know how many people knows about Fibonacci. There are a lot of things new traders don't know about. So to know, to make this thing, it's going to look easy for you when you know this other stuff. Trading is going to be made easy. It's going to be easier for you, and when you know this stuff, because you know what you want to do, you know you're looking for, you know when to take it, you know the time of day you want to be looking for. You are actually hunting for, you're not looking for, you're hunting for these setups. So you have to be the hunter, not the prey, because market makers are how to get you. These banks, they want to take your money. So you are looking for these setups. You know, when you come into the market like this, you just don't want to, when you come to the market and just see this, you just don't want to get into it. New traders don't do that. It's only new traders that do this. Maybe you see the market coming down here and you just sell here. Look at what it did. This is actually going to is to run stops here for anybody that, because obviously when you, I mean, we all did that. If I was a new trader and I was selling here, I'll place my stop loss here. This is to run the stops here. So they are running stops here. And this candle, you see this candle here, this bull candle is actually showing something, but I won't discuss that here. It's an advanced forex. Well, I won't discuss that here. It's this, you can see it's stopped right there. This candle, you can see, like, if you open on this candle, stopped right there. Really, in the real world, like, in, how am I going to put it? Reality, you are supposed to wait for it to come here. This is a good, nice. So you see price bounce here. So this this is actually a good horizontal line, but price didn't get there. You know what they are doing? They don't want price to get there. I'll tell you why price stopped here, but it won't be here. It won't be here. It will be in other short videos like this, maybe. So let's get to what we're saying. So let me delete this. So the indicator and the swing, because you have to see this swing. You have to see swing. This is a swing, as I said earlier. This is a swing. So we are hunting for this. We are hunting for this, that, because when we see this, we know that price is supposed to stop here reasonably. We're looking for something that goes with our setup. So this is just one. So this high here, you can see the indicator was making an higher high. So this high here, you can see the high here and the high here. It was actually low, like it didn't even get there. But the indicator already made and already went above this. So you can even straighten the indicator to see it well. It already is already above here. So what do you wait for it to cross? You might wait. But normally I hunt for this, so I might place my sell limit here. I might just place the sell limit here around this level, maybe the 13175 level. Just place the sell limit here and leave the trade. So obviously, it's intraday. You can take profits. The good thing about when you have a program is when you actually see this trade setup, you can hold the trade for 1 day, 2 days, 2 days maximum. Maybe if you actually know, if you have a good understanding about forecast and where you expect price to go to, so you can actually hold on to these trades. So this trade, and from here, let's just assume you got in on the third candle. From here to this place, that's 60 pips or so. Let's just say you did 50. You did 50. So this is it, 50 pips. You did 50 here. I think that's good enough in a day. So you did 50 and you're done. So it worked here, it worked here. The thing about it is patience. You have to be patient enough to wait for this trade to happen. You just don't go inside the market and start. You don't expect. How am I going to put it? You don't force this trade. You anticipate for it to come to you. You don't force it. You anticipate this trade to come to you, to come down to you. 50 pips, you can do a lot with 50 pips. I mean, most of you have large accounts to handle. So 50 pips. If you throw one lot into 50, that's $500 a day. I mean, I know what $500 can do to me. So $500 a day, some maybe $5,000 a day, some maybe depending on what you're doing. So that's just it. So this is on that day. I think this is a Sunday. I told you this is a Sunday. This two line represents Sunday. This is a Monday. Monday check. Tuesday check. So let's move to Wednesday. And there's something about the time of the week. The week we probably expect the week. How am I going to put it? Like in a week, when in a trading week, if the week is going to be an uptrend, you should likely see the low of the week form around Tuesday, Wednesday. Tuesday, London session, London on the Asian session, anyone. But okay, let's just use the whole day. Like you are only going to see a low form on Tuesday. If it's an uptrend, the low might form like 70% chance, because I've seen this in over time in the chart. It's going to form on Tuesday, and if it's an uptrend, if it's a downtrend, the high is going to post a high on Tuesday on Wednesday, or Sunday. That's the beginning of the week. So if it's not on Sunday, you should expect it to form Tuesday, Wednesday. Most times, not all the time. So most times it's going to form. So that's just another one to add to your whatever. And so let's move. So this is a Wednesday, and you are looking for, you're hunting for these setups. Okay. Okay, so I guess you have been seeing it. So Monday, sorry, Wednesday, you look at this high here. Let me put it so you should actually know what is going on here. theory. So 1, 2, 3. Okay, so this is the eye. You can see it obviously. The thing about it is that you anticipate for it to form the next day. You see, you pick all the eyes. You can see the peaks of the yesterday's trading. You can see this one. You can see this one here. That is yesterday's trading. You can see this one here. So whenever I told you about the like how yesterday's support and resistance affects today's. So how am I going to put it? How yesterday's support. If you held like this trade, the trade, the Tuesday's trade, if you held the trade till maybe for the other day, till the next day, I think you've gotten around here. That would be 170 pips. This is trading made easy for you. Trading made easy. All right, so let's just go on to the next one, the next trade. Okay, the next trade. So this is the you can see the Asian situation. You know the close of the other day, the day of the on a trading day. You should anticipate the close actually happened around 15 no 16 to 19 GMT. So 16 8 16 17 18 or okay, that's I think 16 GMT is the New York close. New York close. So around 18 19 you should expect the market to close. So you should start seeing consolidation around 18 GMT to 19 as you see here. So this should be around 18. Should be around 18 19. So 19 you can see consolidation started around 19. You can see. So you can see down here. You can see down here. Consolidation around 19. So 19 GMT, 18, 19 GMT, you should expect the consolidation. Look at this place. Consolidation started around 20 here. So just 18 downward, 18, 19, 20. Just expect it from so anything from 18 GMT, you should be looking to close or hold the trade. You decide. You'll be looking to know what you'll be looking to close a trade, hold or close a trade. So 18, 19 GMT. This is another time of the day concept. So you should know like specific times. Specific times. Okay, so another one here. Let me see. So this is Monday, Tuesday. I'm actually using this vertical line to you the swings so you could see. So price was making a lower low. I mean, there are some things you might not get here. If you don't understand anything, you can message me. I'm going to list my info after this video. You can message me on things you don't really understand. And I have a one-on-one mentorship program, so you can just message me and ask me anything you want. So price was making a lower low here, but the indicator instead, look at that. Look at that. Saying this alone, you should cross. But the thing is, you can see the way I think price crossed here. The indicator crossed here happening here. So that's why you must really look at price most time. You should look at price. You should look at price. The cross here was just this small candle. I think. Look at the cross here. The cross here was just this small candle. Even this one made a slight cross here, but the real one was happening here. So getting near the London Open, like the London Open is 7 GMT. So getting, I think this was around 7. This was around 7, as you see here, 7. So you can see, so 7 to 9, you should actually anticipate for the London Open. That's the London Open. So you should, for another time down, you should be looking for setups. You should be hunting for setups. So I think it crossed there. We placed a stop, maybe 10, okay, 20. So we did 20 pips stop here. And I think this low was 90 pips. Okay, you just took 50. Okay, so you did 50 here. So you can see 50 pips. Maybe you held on to 50 pips or 60 or 60. So I think let me represent that with that. So the risk was 20, but you were doing 60. So that is like 3 to 1 risk to reward. 3 to 1. So this 1, 2, 3. So 3 to 1. This is the risk, this is the reward. I think that's fair enough. 3 to 1 in a day. You know, when you do this kind of setup, this 3 to 1, 3 to 4 to 1, 5 to 1, to risk and risk to reward or reward to risk. Like, so 3 to 1, 4 to 1, 5 to 1. When you take a loss, when you take a hit, it will affect your equity, but it won't really eat it that much because you are using a good stop loss management. And that is one thing about this market. You have to know how to survive. You have to be able to survive. That is the first thing about this market. You have to be able to survive. It's not about making money. It's about being the best trader you can be and to survive it. So this is another setup here. Even though your stop loss didn't get it, because I think stop loss is around here or so. Stop loss around here or so. So let me see. So yeah, exactly. So stop is around here. So the the trade is still on. Let's just assume you put a take profit for 30, you are out of the trade. But if you didn't, even though you didn't put a take profit, the trade is still on. So it's an intraday. This is another setup. This is another setup here. So let's just see this one. As you can see, it's crossed, but something was happening here. So yes, the price was actually making a lower low swing with this swing. So you can see this one and this one. This swing and this swing. Let me use the okay, so this is it. That was making the indicator was making, price wasn't. Remember, we are in a sell program, so we're looking for sales. If you took this signal, you may not have to take this one again, but just assume you took this one. I just take the trade off here. So let's assume you took this one. Let's assume you got in at this third candle. The third candle, 1, 2, 3. The swing is formed and it's already crossed. So because in this third candle, yes, 38 pips. If we're doing 30 pips, I mean that's good. Even though price went back, but if you were doing 30, I really advise 30 pips. You should do 30 pips, and you are risking maybe 20 or 10. See, I think 10 is okay. Okay, 10 swings above the, it's not 10 swing from your entry, but 10 swing, uh, 10 pips above. It shouldn't be 10 pips from your entry, but 10 pips above this swing. 10 pips. So 10, doing a 10. So 10 pips above the swing. You can do 20. So I think 20 will be like 1.5 to 1%, 1 to 1.5 raised to reward. So 20, because you're actually going for 30 and you're risking 20 for 30. I think that's good. But this one was a good setup. The Asian, it was this setup was in the Asian session. This one was in the New York. So it was in New York. Yeah, 15:30. So I told you around 10 around 12 to 14 is the New York Open, and 14 to 18 or 15 to 14 is the New York close. So another day, let's do another day. Delete these numbers because I already explained to you what a swing is. A swing, and it's the same for a swing low. A swing low is like a low, a candle with two lower lows beside. So this is a swing low. See, you can see that here. So this one and this one. So this is a swing low. So the Asian session, actually looking for setups. This trade, the trade taken the other day, if you like, if you if you put on the trade and you didn't close it, you let it run, I think your stop loss didn't get it here. I think 20 pips, 20 pips, 20 pips is here. So this is where your stop loss is. You can see 20 pips is here. But price didn't get there. Let it run. This could have been a good one because you entered the New York session, but you didn't actually get anything. If you let the trade run, look at what would have happened. If a good price setup was here, and once again, I mean, right here on this day, this is actually a setup for me. But since this is an indicator, like this trade would actually have been the one indicating, so that have been good. So, but there's actually a trade here. I think for anyone that is actually looking for a trade, you can see price actually made a higher high. You see, do you see the way price broke through this? But here on this high here, was price making an higher high? I don't think so. So I'm using, no, it didn't. So this is another one. This is a good one, but I mean, it's not really visible, but if you actually could see it, you would know it happened already. So you could just follow the trend and maybe look for, like here, like right here, after price broke this low on a retracement, you can see. So price returned back to this point. You can see the way price came back up, and you can see the way price was respecting this place. So it was price broke through it and came to retest. This is like a break and breakout and retest. So price broke through this support here and it retested it. So you could enter, you could get something here, you get something here, get something here. So that's a good one. But it happened here. Price right on this swing here. You can see, I mean, it might be a little bit so you can see it. So price actually made a higher high, but the indicator didn't. This high indicator made here, this high here was still higher than the one in mid here. So, but price is the king. Price was making it, but the so that's a sell. That's a sell. That's a galvanic. That's a sell. So that's a good one on that day. Let's just assume no trade was here today, even though this was a good run. If you leave the trade you took here, trade you took here, trade open, would have been a good one here. And you can see it was continuing, it kept on going down. If you just this trade, you trade took here or here, the one here would have no stress. That's why I was more focused on the directional premise. You must know, you must like is you should have a forecast first on where price might be going. So it will be easy. Trade will become easy. You know what you're looking for the following day and the following day to the supposed support or resistance where price might reverse or stop a little bit, or and that should be done on the high time frame, the 4 hour daily and the weekly. People don't like to go to the weekly, but I advise you to start doing to take out. I'm going to do in the next video how to use weekly support and resistance to bring it down to lower time frame. From the weekly, you're going to bring down those support and resistance to lower time frame. I'm going to show you how to use it. Okay, so let's just okay, and let's see. So this is the I made here. The price stochastic was actually expecting price. Nothing really happened. But of course, this one, you can see this eye here. This eye, get it on stochastic. Remember, we're looking for sell signals, so we should take advantage of any sell signal we see. And you can see the eye here. So basically was making the price was making a lower low, but look at this stochastic caught in the act was making an higher high. So I mean, if you got in here, the price could have maybe a 20 pip stop. Price could have see this is another entry here. If you got in here, because the trend is in your favor, so there's a probability that you can even take setups any day, like any session. This is actually the close. This is actually New York close, so no volatility during that day, but it happened the other day and it continued to go down. So that's another good setup. See, this is the I made in London session. This is under okay, London. I think in New York. Okay, 11. So okay, I think it's New York. You can see 12. You can see that 12. Exactly at 12 it reverse. That is 12. I told New York to 12. Look at this. 10. So 9, 7, 9, 10. I mean, if it's not 12, then 11 downward should be the New York. So it's 9 to 11 is the London. So you can see it. So this is another one here. And you can see going to the next day, look at this I made here. You should start note when you are going to the next day, you should note, I said it earlier, you should note the I made the other day. Going into the next day, you should note the I made the other day. So this is the I made the other day. And look at this high. See. So stock was actually making a higher high, while price was making lower low. So this a good divergence or what? Okay, so proceed again. Are we into another day? Okay, what's on this trade? Okay, price, I don't think price should analyze on this one. So okay, so you just keep it keeps happening. It keeps happening. So this is another high made here. You can see this high. This is the Asian session high. So you should start talking for setup here. So see what price did here. So right here, price was making a lower low, or indicator was making a higher high. Let's shift it out. So price was making a lower low, but indicator was making a higher high. This is another good setup here. Another good setup. Exactly. So look at this one here. Look at this high. We are looking for sales, remember. So if you miss this one, this is another opportunity to get in and do maybe like 30 pips or so. So price was making a lower low. But look at this. Like price indicator was making a higher high. That's a nice one. This is a swing for years. You can see. So this is a swing. This is the swing that the indicator was there. So I think this one should be around 30. Yeah, see? So it's actually 43 pips in general, so you did like 30 there because you weren't expecting much. This is the New York session. Okay, so another day. You can see another day. You know, the thing about it is that when you don't see something coming up that same day, if you check the swings of the same day, like this swing here, like this swing here, and this swing here, another swing here. So if you are checking it and nothing is actually coming up, you can use the swing of the other day to bring out something good, because you are looking for sales. So you can use the swing of the other day to bring out something good. So this is a nice swing. Okay, actually, let's see. This is the high. Okay. So see the eye. See this small eye here. Look at it. See this eye. See the way the indicator made it sharp here. Made it sharp. It's easy for me. You have to. Okay, there's something about this. You have to go to your chart and see this thing happen. When you see it often, you are going to be able to train your eyes to see them well. So you see this eye here, because this is the Asian session. So maybe I'm expecting something in the New York. I'm looking for a sell. I'm looking for a sell. To me, this candle here, see this candle. I was saying something about this candle. This candle, even without the indicator, I said it earlier. I'm not really an indicator-based trader. Purely price action. I'm just doing this for new traders that you don't get good with their entries. People actually do complain about entries and exits. So this is I have used this candle here, candle before this move down. Look at what I got. It was very good. You can see the way price reacted at this same spot again. So you should know this candle is important. I'm going to talk about that whenever. So price made, but what was indicator doing? It wasn't making an higher high. It wasn't making an higher high. It wasn't making an higher high, so this is a good sell. And besides, you can see, so support and resistance. You can, if you know, I told you you must have a firm graph of support and resistance, so you can use support and resistance. Yeah. So you got in here, maybe you got 20 pips. Let's see, because you wait for this third candle to form the swing guide to show your entry. So maybe 146, maybe you did 40 or 35 or 30, anyone you choose. So video is getting long, and the last day before this, the beginning of a new uptrend. So you can start looking for buys. So you can see a quick buy here, quick buy. So let's just, I use this line to show when it became a buy. So look at this last day before the buy. Look at this. So price was making a lower low right at this, right at the London session. See, but it was the indicator was pushing a what, a higher high. So this is what, this is a good sell. Wait for it to form, even though it did a little bit. That's why I told you must go maybe to the 30 minutes or the 1 hour to check a better view of it. But if there also you got in at this candle where it's actually crossed and used a 20 pips stop loss. You see, even price did 12852. So those are some we did it here. The stop loss is here. So you got in around here, the 54 pips, maybe you did maybe 40 or 30. So that's a good one. That's another good day. So that's just it. And for the buy, you can see when price started moving up, you can see a good buy here. You can see price was making higher high. What was the indicator doing? It was making a lower low. Though not too low, but it's obvious it was making a lower low. Because price, look at the overlap stuff here. So, and I think it was retesting this broken, this one. See? So price, this when price broke through, it came and it tested it back. So that's another probability in your favor. The odds are in your favor now, so you can take the trade. So another day, nothing really happened here. But it did. You can see the low posted in the Asian session. See this low? Get there, but look at it. See? So we are in a buy program now. We're in a buy program. I just want to do this quick to end this. This is actually getting long now, so doing this to end the broadcast fast. So you can see, you see the low made here in the Asian session. I'm going to actually tell you another way you can use the Asian session for a good setup. The low and the high made in this Asian session, how you can use it for good setup. Either a buyer or a seller, you can just use the Asian session, the high, mid, or the low, to look for divergence, to hunt for divergence. So you are going to anticipate a divergence being formed, because you know the low and the high made in the Asian session, and it is actually consistent like 90%. So, and it's easy, but it's a scalp strategy. So it's just a get in get out stuff. But my next video is going to be on swing trades, how you can swing and bring swinging to scalping, because when you actually swing, you have an idea of where price is going to. You can use that in your favor and bring it down to lower time frame to use it to scalp. That's anybody gets what I'm saying. So that's just it. So this one was gone. So you just wait for it to cross. See it cross here. So I mean, around here, cross was here. So I think 30 pips, you're risking 20. Could you try hold it till it was 60 pip that day, but maybe you did 50 or 40. You can hold it. You should be able to hold trades. So because if you fear losing, you are going to eventually lose. So you should be able to hold on to trades. So you didn't actually get anything good here for a buy. Ah, and look at this. Okay, look at. I think this was a news. You can even see it even worked for a news. You know, we're in a buy program, remember? So this news is supposed to be a buy. You have that in mind already, so you are hunting for a buy. So let's just assume low mid here. See it here. See, price was making. See how it bounced right at that 1.28, 7, but 6.5 maybe. See how it bounced there, but see what it was doing. It was making yeah, you can see that this swing here, it was making it. So you wait for it to cross. Look at on that cross, right on that cross. It formed a swing. 2, 3. So maybe you got in here. 20 pips stop. 20 pips. Okay, 20 pips. Sorry, 20 pips or 10 pips above this swing. So just go down there. So and see what. So say a good trade, and obviously you can see it going higher and higher and higher and higher and higher. So it's a good buy setup. See, it's a good buy. Look at price was making because we're in a buy program now, so we are looking for buys. It was making the indicator was making a lower low, but price was making and if you held on to this, see the other, I mean, if you see a trade around the 19 GMT downward, the 19, 18 upward, you should expect no volatility much. You should then like the volatility is not going to be much, so you should be able to hold it to the next day, and that is what you see there. So maybe you use a 20 pip stop and you hold on to it the following day. This generally 100, okay, 100 pips, so maybe do like 15. Yeah, do for 15. I think that's good enough. So another buy here. Carry on for these setups. So you wait for something, you look for something that makes sense to you. You have to see the obvious and you look for something that makes sense to you. Don't force this trade. You have to look for something that makes sense to you. But since you are using the divergence for your entry, you can. It's okay. Right here, there was actually divergence. You can see. No, but so actually it was a divergence. So that's just it. I'm not much of this scalper, but I use this most and it works. It works. So, but I use it with because I already understand what's going on the higher time frame. So I actually know when to look for your trades. And the best trading days are actually Tuesday, Thursday, Fridays. So Tuesday, Thursday, Friday. It's actually a good day to trade. This was a Friday trade. This was okay, this was a Tuesday. You see, Tuesday. It was a Thursday. So Tuesday, Thursday, Friday. They're actually good trading days. And check this thing out, the time of day of the week. I said Tuesday, you happen to see if it's an uptrend of that in that week, you are likely to see the low being posted on Tuesday or Wednesday, 20%. So most times that's how it happens. Or if it's if it's an uptrend for that week, you see if it's a downtrend, you're likely to see the high being posted on Tuesday or Wednesday. But mostly Tuesdays. So when if it doesn't form on Sunday, that's the beginning of the week. Like this one, I think it was on Sunday. Sunday it started going down. I think it went up back. So right here on okay, so Monday, this was Sunday, Monday, Tuesday, Wednesday, the low was made. So it was already Tuesday, but it came and did a run on stops. For anybody placing stops here, so let's see, came down again Tuesday. This is actually a divergence. So this low medium. See, let's see this. In the 30 minutes, I think I saw this on 30 minutes. I took this trade. It really happened very well on 30 minutes. You can see how it's obvious on 30 minutes. You see, it's a cool trade. This one, see, it was making a higher high. Indicator was making a lower low. So because it's already it's hit this level again, so it's already we're ending in a buy program again. So generally, okay. All right. So let me just remove the. So next week, by the time at the time of this video, this is 9th September. It is 10th. Sorry. By the time of this video, my analysis on the USD card is I would like to see next week going into next week. I would like to see what USD card does around the 13090 level. Around this zone. So around this zone, I would like to see. I'm interested in what price we do here, and I'm interested in what price we do here, and even using the Fibonacci. You see, confluence 79%, 79 retracement level. I see that confluence along with. So I would like to see what price does here. But looking at the USDX, that's the US dollar index. I think it's you see price respect this level and go down. Respect level and go down. So the next week is going to be a I don't know. But my setup for this is a sell. I like to see, but if it breaks through, I like to see what price it does. So if it breaks through and test, it's a buy or obviously. But generally, on the daily, on the daily, on the daily, on the daily, this is a swing trade for me. I see the way price respected the 79, this one level. It was where the 70 came back. So actually, it's actually a buy for me. I'm looking to see price get to the 1.3254 level. A buy, but I know price will react to this price, so I just take advantage of it. But price is actually going to break through this level for me. That is my analysis. Okay, so I'm dropping my info now. You can add me on Facebook. This is my Facebook. So LB Piles Joseph on LB. Search for Piles Joseph. Piles Joseph. So on Piles Joseph on LB. On Instagram. ID. Follow me on Piles FX. FX IG. and and my group on FB is Forest Institute. That's my group on FB. You can search for this group on FB, FX Forex Institute. FX Forex Institute. Then, and my one-on-one mentorship, you can, for those on my group already, you can text me, you can message me on Facebook and ask me about it. So it's really affordable and you're going to learn a lot. I promise that. So this this is it. And on Twitter, you can follow me on Twitter. I'll be sharing my Twitter link on the group. So, but let me search this. On Twitter, you can follow me at man. I let's go. On Twitter, you can follow me at FX. It's Twitter. Twitter FX. Yeah, FX. Okay, guys, I'm done here. Expect the next video. For